Hello, it's Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Now, recently, we've been asked by some people about how to refix their loans. They were frustrated by how quickly the bank increased the rates and by the amount of increase. They're really not sure what to do so that they can choose the best possible strategy. So today, let's talk about the interest rates. But before I start, I just want to put out a quick disclaimer. This video content is not a personalized advice. This is just a general guidance. Just give you some tips and strategies so that you can make a decision for your home loans, fixed term. Now, if you want to get personalized advice, it's really simple. You can engage with your financial advisor or simply contact us, and we are more than happy to help you. Okay, without further ado, let's kick in. So firstly, let's look at how the rates trending, okay? So for the next few years, it looks like the interest rate will keep going up. Well, at the moment, in my view, the interest rate was mainly driven by inflation, which is, living cost, and also the housing price. The good news is housing price is flat, and in some area has actually dropped, so that the mortgage interest rates, maybe the hike is slower as a result. However, the bad news is the inflation is still very high and it can be higher. In my view, the inflation are also driven by two factors. One is as a result of COVID, the production of goods and the delivery of the goods have been delayed. Now, the other reason is the war between Russia and Ukraine. As a result of the war, a lot of imported goods are more expensive, like petrol, right? So that all drives inflation. And I don't think these variables has some ending dates, and we don't know how long it's going to last and how these variables can change. So there's no crystal ball how far the interest rate will keep going up. So it's not really a simple decision to decide how long you want fixed for. But firstly, let's look at the one-year rates, because one-year rates is the most popular fixed term that people have been using for the last few years. And I think it still has its merit. Now, I recently read ex-chief economist Tony Alexander's publication that was published in March, end of March. So his prediction for one-year rates in 12 months will be about 4.75. And the current rates depends when you watch this video, but today is 3.99. So if I take these two rates and I work out the average of the two rates, that's 4.37%. So what tells me that if I do, rolling every year for the next 2 years, the average cost is 4.37%. First is if I go with the 2 years, now I will probably pay 4.55 or 4.6%. So the one-year rates does, feel like, has the most value. But I have made a big assumption. If I agree with Tony, and then I think the one-year rates, it is good. But if your prediction is different, if you predict it's 5% in 12 months, then probably 2 years has a better value and give you more certainty. What I want to say is the rates will go up, but how quickly is a big question, is $1 million question. And you need to think about what's your view on that. Now, apart from the one-year rates, who need to consider a longer kind of fixed term? The first situation is that if your prediction about the one-year rates is higher than Tony's, you think the interest rate will hike very quickly, then probably have some of your loan, if not 100% of your loan, should be fixed at kind of immediate term, like 2 years and 3 years. I think the 2-year rates is still very valuable. If I compare the 2-year rate now, 4.55 versus the average of 1 year for the next 2 years, which is 4.37, we just calculated, it's very, very close. So I probably consider 2 years if I want some certainty, okay? Or if you're not sure, how the rate's going to go. The second scenario is if your loan is relatively large size. Now, there's no definition for large. In my view, it's close to 1 mil or bigger. Then I suggest that you split your loan for at least 2 parts so that they come off at different times. So even if the rates increase dramatically, you only the repayment increase is only incremental. It's not a big jump, so that you have time to make adjustment. Okay. The next scenario is if you already feel the repayment pressure, you think, okay, I can still afford it, the interest rate at 4.5, 4.6 today, but if it's jumped to 5%, I will feel some pressure, and I really don't have a plan B. I don't have a lot of cash reserves. Then probably just go with the 2 or 3 years, because after 3 years, probably things will settle down, and I believe in the long run, the rates will eventually go down again. But we just don't know. It's in a year or 2 years or 3 years. So you just go with a couple years from now. You just keep paying the same amount, and you have that peace of mind. Okay, so that will be my view on the strategy. And finally, I just want to remind you that these days you need to have some cash reserves. So if you have some savings, you want to make a lump sum payments into your loan, maybe think it twice before you do that. Because if you repay, that money, use that money to repay your loan, it depends on which bank you use, and it doesn't mean you can get the money back when you need it. So with so many uncertainties at the moment, war, COVID, mortgage commitments, and job, some people has job that's potentially not secure. I think have extra kind of a cash besides is really important. Because if you can't keep up with the mortgage repayments, that's a disaster, okay? But with some customers, if your banks has a good product that allow you to withdraw the money that you repaid or convert it into a revolving or offset product, you can then enjoy, less interest, and also you can reuse the money if you need to access to that money. It really depends, but the goal is to have that cash available that you can use at any time if you need it. Okay, so that's my recommendation. So I hope today's video is useful, but like I said, this is not personalized advice. Now, if you need help to review your situation, please get in touch with us. We're more than happy to help you. All right, thank you so much, and please take care. I'll see you next week. Bye-bye.